Something very interesting just happened during President Trump's recent China trip, and I honestly think most investors completely missed the real story. The headlines were all about Nvidia reopening business ties with China, but if you really read between the lines, the company that may ultimately walk away with the bigger long-term opportunity here is AMD. And I know that sounds crazy at first because Nvidia is still the king of AI. There's no debating that. Their dominance is absolutely incredible. Their 𝗗𝗚𝗦 ecosystem has become deeply embedded across the AI industry. Their Blackwell architecture is still years ahead in many respects, and their financial numbers are honestly ridiculous. You know, one of the biggest mistakes investors make during major market cycles is focusing only on the loudest headline instead of asking a much more important question. Who is quietly positioning themselves to benefit when all the noise dies down? And right now, I think that exact situation is playing out in the AI chip war between Nvidia and AMD, because over the last few years, Nvidia has basically become the face of artificial intelligence. Every conversation around AI eventually circles back to Nvidia. Every major hyperscaler is buying Nvidia chips. Every Wall Street analyst talks about Nvidia like it's the only company that matters in AI infrastructure. We're talking about a company that generated more than $200 billion in revenue over the past fiscal year, with almost $100 billion in free cash flow. Those are not normal numbers. Those are empire-level numbers. But sometimes the best investment opportunities are not about identifying the current king. Sometimes it's about identifying who benefits from the changing political and economic environment around that king. And that's where AMD enters this conversation. Because what we're witnessing right now is not just a technology competition anymore. This is geopolitical chess. Semiconductors have officially become political weapons. These AI chips are now tied directly to national security, military development, economic dominance, cloud infrastructure, surveillance systems, and future technological leadership. That changes everything. A few years ago, semiconductor companies mostly competed on performance, efficiency, pricing, and innovation. But now governments themselves are involved. Export controls are involved. Diplomacy is involved. Trade negotiations are involved. And once governments get deeply involved in an industry, the rules can change overnight. That's exactly the problem Nvidia faces right now in China. Now, to understand why this matters so much, you have to understand how important China used to be for Nvidia's business. Before all these export restrictions started hitting the semiconductor industry, China represented roughly 20 to 25% of Nvidia's data center revenue. That is massive. We're talking tens of billions of dollars in potential business tied directly to one market. China was rapidly building out AI infrastructure. Chinese cloud companies were racing to develop their own AI systems. And naturally, Nvidia became the primary supplier because nobody could compete with them technologically. Alibaba wanted Nvidia chips, ByteDance wanted Nvidia chips, JD.com wanted Nvidia chips, Tencent wanted Nvidia chips. Basically, every major Chinese technology giant needed Nvidia hardware to stay competitive in AI. But then Washington started tightening restrictions. And honestly, from a national security perspective, you can understand why. The United States government became increasingly concerned that advanced AI chips could help China accelerate military systems, surveillance capabilities, cyber warfare tools, and next-generation AI development. So both the Biden administration and later the Trump administration pushed various export controls targeting advanced semiconductor shipments. That immediately created uncertainty for Nvidia. One month investors would hear positive news about licenses and approvals. The next month new restrictions would appear. Then modified restrictions, then temporary exemptions, then political negotiations. And this is exactly why I think investors need to stop viewing Nvidia purely as a technology company. Nvidia is now partially a geopolitical asset whether they like it or not. Their products have become too strategically important, and ironically that may actually create opportunities for AMD. Now, during Trump's recent trip to China, Nvidia appeared to score a major win. Agreements were announced allowing Nvidia to sell H200 AI chips to several Chinese companies including Alibaba, Lenovo, JD.com, and ByteDance. At first glance this looked incredibly bullish for Nvidia, and to be fair, it was still positive news. Investors immediately got excited because they started imagining Nvidia regaining access to one of the world's largest AI infrastructure markets. But here's where things started getting interesting. Shortly after the announcements, reports started surfacing that Chinese regulators were placing Nvidia GPUs under tighter scrutiny, and this is the key detail most people overlooked. China's government clearly still wants access to advanced AI hardware. They understand AI is critical for their economy and technological future. But at the same time, they also do not want to become overly dependent on one American supplier that sits directly in the middle of US-China political tensions. That's the issue. Nvidia became too dominant. And when any foreign company becomes too strategically dominant inside another superpower's technology ecosystem, political concerns naturally emerge. China has watched what happened with export restrictions. They've seen how quickly access can change based on US policy decisions. That creates enormous strategic risk for them. So from Beijing's perspective, depending too heavily on Nvidia may now look dangerous. And this is where AMD suddenly becomes very attractive, because AMD occupies a very different political position. They're still an American company, yes, but historically they have not dominated China's AI infrastructure market the way Nvidia has. That matters. Sometimes being the second largest player actually creates flexibility. AMD is viewed less as an entrenched monopoly force and more as a potential balancing partner. And one thing governments around the world consistently prefer is optionality. No government wants to depend entirely on one supplier for critical technology infrastructure. Not the United States, not China, not Europe, nobody. That's why the reports surrounding AMD CEO Lisa Su's meeting in Beijing were so important, because according to reports, China's Vice Premier He Lifeng specifically invited Lisa Su to deepen cooperation as trade relations stabilize. Now I really want investors to slow down and think about that for a second. That is not random. High-level meetings like this matter enormously in global business. Governments do not casually signal strategic interest in semiconductor partnerships, especially not during periods of heightened technology tensions. And in my opinion, Beijing may essentially be signaling something very important to the market here. They may be telling us that while Nvidia remains technologically dominant, AMD could become politically preferable in certain areas of China's AI expansion. That distinction could become extremely valuable over the next 2 years. Now, does this mean AMD is about to replace Nvidia? Absolutely not, and I think investors need to stay realistic here. Nvidia still has enormous advantages. Their 𝗗𝗜𝗏 software ecosystem alone creates a massive moat. For those unfamiliar, 𝗗𝗜𝗏 is essentially the software foundation developers use to optimize AI workloads on Nvidia hardware. The problem for competitors is that once companies build their entire AI infrastructure around 𝗗𝗜𝗏, switching becomes expensive, time-consuming, and operationally risky. This creates a powerful lock-in effect. It's very similar to how Microsoft dominated enterprise software ecosystems for decades. Once companies build around your ecosystem, they rarely want to leave unless they absolutely have to, and Nvidia understands this perfectly. That's why Nvidia isn't just selling chips anymore. They're selling an entire AI infrastructure ecosystem. That ecosystem advantage is incredibly difficult to disrupt. But here's the thing, investors also need to understand. AMD does not need to completely beat Nvidia to become an amazing investment. I think this is where many retail investors get confused. They assume that unless AMD overtakes Nvidia entirely, AMD somehow loses. That's not how markets work. A company can generate enormous shareholder returns simply by capturing incremental market share inside a rapidly expanding industry. And the AI industry is still expanding at an unbelievable pace. We are still in the early innings of global AI infrastructure spending. Every major cloud company is spending aggressively. Governments are spending aggressively. Enterprises are spending aggressively. Startups are spending aggressively. Universities are spending aggressively. Even sovereign wealth funds are now investing heavily into AI infrastructure projects. The total addressable market here is gigantic, so AMD doesn't need 100% market dominance. They simply need a growing slice of an exploding pie. And that's exactly why their MI300 accelerator family matters so much, because AMD's AI accelerators are finally gaining legitimate traction. A few years ago, many people viewed AMD as permanently behind Nvidia in AI, but now hyperscalers and enterprise customers are increasingly testing and deploying AMD hardware for certain workloads. That's a huge shift. Once large customers start validating your AI products at scale, momentum can build surprisingly quickly. And I personally think investors sometimes underestimate how much large customers want alternatives to Nvidia. Not because Nvidia's technology is bad, quite the opposite. The problem is Nvidia became so dominant that customers started worrying about pricing power and supply dependence. When one company controls 80 to 90% of a critical market, customers naturally start searching for secondary suppliers. That creates openings for AMD. And if China itself starts encouraging broader AMD adoption as part of a diversification strategy, AMD could quietly gain substantial revenue opportunities that Wall Street may not be fully pricing in yet. Especially because most investors still frame AI as Nvidia versus everyone else. But what if the future becomes much more fragmented politically? What if governments intentionally diversify suppliers? What if certain regions favor AMD for strategic reasons while others continue favoring Nvidia? That scenario becomes very interesting for AMD shareholders, because again, AMD doesn't need to dominate globally, they just need meaningful growth channels. And honestly, I think the market may still be underestimating Lisa Su. She has done one of the most impressive turnarounds in modern tech history. When she became CEO, AMD was struggling badly. The company was losing relevance. Intel dominated CPUs. Nvidia dominated GPUs. Many investors basically viewed AMD as an afterthought. But Lisa Su completely transformed the company through disciplined execution and engineering focus. She rebuilt credibility, she rebuilt product competitiveness, she rebuilt customer trust, and now AMD is competing seriously in some of the most important technology markets on Earth. That leadership matters enormously in moments like this, because navigating geopolitical complexity requires more than just great engineering. It requires diplomacy, strategic patience, and careful relationship management. And from what we're seeing right now, AMD may actually be handling that balancing act very effectively. Now, one thing I really want investors to think carefully about is how different the market environment is today compared to just 5 years ago. Back then, semiconductor investing was mostly about product cycles, margins, and innovation roadmaps. Investors focused heavily on transistor density, performance benchmarks, server adoption rates, gaming demand, and data center expansion. All of that still matters today, of course. But now there's another layer sitting on top of everything, and that layer is geopolitics. And honestly, I don't think the market has fully adjusted to how important geopolitical positioning has become for semiconductor companies. Because in this new AI era, access matters just as much as technological superiority. You can have the best chip in the world, but if governments restrict where it can be sold, your addressable market changes overnight. That's exactly why this China situation is so important. China is not some small secondary market. China is one of the largest AI growth opportunities on the planet. The country is aggressively investing in AI infrastructure, robotics, cloud computing, autonomous systems, industrial automation, and next-generation data centers. And they're moving incredibly fast. Chinese companies understand that whoever wins the AI race could dominate major industries for decades. So there is enormous urgency happening behind the scenes. That means demand for advanced AI chips is not slowing down anytime soon. In fact, I would argue global demand for AI compute is still massively underestimated. We're moving into a world where AI becomes integrated into almost every sector imaginable: healthcare, finance, defense, manufacturing, education, logistics, advertising, content creation, software development, autonomous transportation, cybersecurity. The compute requirements for all of this are absolutely enormous, and every AI model upgrade requires more power. Every new reasoning model requires more power. Every enterprise AI deployment requires more power. This is why companies like Nvidia and AMD are sitting at the center of one of the biggest infrastructure booms we've seen in decades. But here's where things get really interesting for AMD specifically. I think China's strategy may ultimately revolve around diversification rather than total replacement. And that's a very important distinction. I don't think Beijing realistically expects to completely eliminate dependence on Nvidia tomorrow. Nvidia's ecosystem is simply too entrenched right now. But I do think China wants optionality. They want leverage. They want alternatives. And from a strategic perspective, that makes complete sense. Imagine if your entire national AI infrastructure depended heavily on one foreign supplier whose government could potentially tighten restrictions at any moment. That's an uncomfortable position for any country to be in. So naturally, China is incentivized to broaden relationships with multiple semiconductor companies whenever possible. And AMD fits that strategy extremely well, because AMD is strong enough technologically to matter, but not yet so dominant that they become politically threatening, in the same way Nvidia has. That balance may actually become one of AMD's biggest advantages. Now let's talk about valuation for a second because this part is very important. One reason I think some investors are paying closer attention to AMD right now is because Nvidia's success has become almost too obvious. And whenever a company becomes universally loved on Wall Street, expectations become incredibly difficult to satisfy. Now to be clear, Nvidia still deserves enormous credit. Jensen Huang has built one of the most important technology companies in modern history. I don't think that's even debatable anymore. But expectations around Nvidia have become absolutely massive. Investors expect near perfection every quarter. They expect explosive growth every quarter. They expect dominance every quarter. And historically, when expectations reach extreme levels, even great companies can experience volatility if growth slows even slightly. AMD, on the other hand, is still viewed more as a challenger. That creates a different psychological setup for investors. There's still room for positive surprise. There's still room for narrative expansion. There's still room for market share gains to materially change investor perception. And personally, I think the market may still be underestimating how much revenue opportunity could emerge if AMD becomes a larger strategic AI supplier globally, especially in regions trying to reduce concentration risk around Nvidia. Now, another thing that's fascinating here is how this situation exposes the unintended consequences of export controls. Because when governments impose restrictions on dominant suppliers, customers naturally start accelerating alternative ecosystems. That's just how markets work. If China feels uncertain about long-term access to Nvidia chips, they will aggressively explore alternatives. Some of those alternatives will be domestic Chinese chip makers, some will involve customized infrastructure strategies, and some will absolutely involve AMD. So ironically, the political pressure surrounding Nvidia may indirectly help AMD expand faster than it otherwise would have. And honestly, we've seen versions of this pattern throughout history. Whenever one company becomes too dominant in a strategically sensitive industry, governments and customers start encouraging competition, sometimes explicitly, sometimes quietly behind the scenes. But it happens over and over again. The same thing happened in telecommunications, the same thing happened in energy, the same thing happened in aerospace, and now we're seeing it happen in AI semiconductors. Now, I also think investors need to pay attention to leadership styles here because leadership matters enormously during periods of uncertainty. Jensen Huang is obviously brilliant. He's become almost iconic in the AI era. His vision around accelerated computing turned Nvidia into a powerhouse long before most people understood where AI was heading. But Lisa Su deserves just as much respect for how methodically she rebuilt AMD. And in some ways, AMD's culture may actually be very well suited for the current environment. They've spent years competing from behind. They've spent years operating with constraints. They've spent years fighting for market share against larger competitors. That kind of experience can create operational discipline. And I think investors sometimes underestimate the value of being underestimated. Because companies that grow up fighting for survival often execute differently than companies that dominate from the top. AMD had to earn credibility the hard way. They had to win customers gradually. They had to prove performance. They had to prove reliability. They had to prove consistency. And now they're entering the AI race at a moment when customers are actively looking for alternatives. That timing could end up being incredibly important. Now, another angle I want people to think about is pricing dynamics. Nvidia's dominance gives them tremendous pricing power. That has been fantastic for Nvidia shareholders. But from the customer side, it creates pressure. AI infrastructure costs are becoming enormous. Training large AI models can cost hundreds of millions of dollars. Building hyperscale AI data centers requires massive capital expenditures, so naturally, customers are increasingly evaluating whether AMD solutions can offer competitive performance at more attractive economics for certain workloads. And if AMD can position itself as a strong second option with improving software support, they don't need to win every workload to grow substantially. They just need enough customers deciding that diversification makes sense economically and strategically. That's a very achievable scenario. Now let me also say this because I think balance is important. There are still real risks for AMD. This is not some guaranteed straight line upward. Nvidia still has enormous technological advantages. CUDA remains a huge moat. Developer loyalty remains strong. Enterprise switching costs remain high. And Nvidia's pace of innovation is still extremely aggressive. So AMD absolutely faces serious competition. But the broader point I'm making is that markets are evolving beyond pure technology comparisons. Political relationships now matter. Trade dynamics matter. Supply chain resilience matters. Regional access matters. Strategic diversification matters. And in that environment, AMD may be positioned far better than many investors realize, especially if China continues signaling openness toward deeper AMD cooperation. Because if even a portion of China's AI infrastructure demand gradually shifts toward AMD over the next 12 to 24 months, the financial impact could become very meaningful. Remember, AI infrastructure spending itself is still exploding higher, so even moderate market share gains can translate into billions of dollars. And Wall Street tends to reprice companies very quickly once recurring revenue momentum becomes visible. Now personally, I also think there's a broader lesson here for investors about chasing obvious narratives. The obvious narrative is usually the most crowded one. Everyone already knows Nvidia dominates AI. Everyone already knows Nvidia is extraordinary. Everyone already knows Nvidia is central to AI infrastructure, but sometimes the more interesting investment opportunities emerge in the secondary effects around those dominant narratives. And right now, one of the most important secondary effects may be global customers searching for alternatives, diversification, and geopolitical flexibility. That directly benefits AMD. Now, will AMD suddenly become bigger than Nvidia tomorrow? No. But could AMD become one of the biggest strategic beneficiaries of a more fragmented AI world order? Absolutely. And honestly, I think that possibility deserves far more attention than it's currently getting. Because when you step back and look at the bigger picture, this isn't really just a story about Trump, Nvidia, or one trade trip to China. This is about the future structure of the global AI economy. Will one company dominate everything, or will geopolitical tensions gradually force the market toward multiple competing ecosystems? That's the real question investors should be asking. And if the answer ends up being multiple ecosystems, AMD could become one of the most important companies in the entire AI supply chain, especially because they're no longer just surviving. They're scaling, they're competing, they're building credibility in AI infrastructure. And now they appear to be building important geopolitical relationships as well. That combination is powerful. So while the headlines focused on Trump reopening the door for Nvidia, I honestly think the smarter investors are paying attention to something else entirely. They're watching who China may actually want as a long-term partner, and increasingly, it looks like AMD may be positioning itself to become exactly that. If you enjoyed the video, share your thoughts in the comments, and subscribe to the YouTube channel so you don't miss out on the next important analysis update. Thanks for watching, and I'll see you in the next one.